Now the exhaustion gap, it's all over bar the shouting is the phrase here. Signal that the trend is over. It occurs at the end of trends. Prices fail to continue the trend after the gap, signifying a trend is weakening. The strategy here is the bars have been in a strong trend. The price jumps in the direction of the trend, leaving a gap between the bars open the previous bar. The volume on the gap bar can be high, and it's not necessarily a specific requirement. It fails to make new highs and lows is the key thing. It's really an exit strategy. If the trade is already in play, then we can get out of the trade. That's the key thing. So it's really used for us to exit the trade. If we start seeing it gap on low volume or even on high volume, doesn't really matter, but it starts to make lower highs. For example, if it's we're on an uptrend, then we could get out. We could also use this as an entry strategy, and we could buy and sell on the bar that the gap is then filled. And we'll look at that as we move into the more aggressive trading and intraday gap trading modules as we move on. Stop again is at the prior swing lows and highs. Again, we can use this for both end of day and intraday trading. So here's the uptrend. Here's the exhaustion gap. Notice it fails to make extra highs or further highs, fails to make new highs, and therefore you can see it starts to pull back, and then we start to fall. So that's simply an exhaustion gap. Now we could short here. We could either close a long position on this, or we could short as the gap is filled and take a short position. So look at some examples on the exhaustion gap. We've got Ken. Notice here that it's gapped up. High tests, doesn't it? Fails to make any new highs, consolidates, and then falls. Again, could we have entered this one short as per the previous example? Yeah, absolutely. It's blown off tires and then starts to fall down. Yeah.
Greg, I can't quite imagine what causes an exhaustion gap. I mean, if it's exhausting, what gives it that big push up or down?
Oh, there's no question. There's still, if it's in an uptrend, it's still buying pressure. That's what's caused it to gap up. But then it just fails. That's it. In other words, it's just blown off its last steam, and then it just literally falls back. And you can, like for this example here, you can see it's tested up. Here was the volume in September on Oracle, and then it just fails, just falls back. So it touched the the $14 mark, and then just starts to fall.
So is October the 8th another one? Just above where your cursor is? The right.
Yeah, it is, isn't it? October the 8th is classic. Brilliant. Well spotted. So here, in fact, we've got let's go through this. We've got an exhaustion gap here, haven't we, which ended the move. There the move is moving down. What would we call this?
Continuation.
Brilliant. Continuation gap of that downward movement. Then it turns. Then what have we got here?
Continuation. Oh, it's consolidation.
Little breakaway gap, haven't we? Because it's now starting that move back upwards. And then this would be a...
Exhaustion.
You've got it. You've nailed it. Yeah, this is an exhaustion gap because it's failing to make higher highs. Does that make sense to everybody? Tony, you okay? Yeah. Good. Okay, let's do some practicals. Where's the exhaustion gap?
Middle of September.
Yeah, mid-September there, isn't it? That's it. Fails to make new highs, just falls back. How do we know it's an exhaustion gap? Yeah, it's already in trend, isn't it? It's already in movement. Gaps to the top of that, and then just fails to make either higher highs if it's on an uptrend, or lower lows if it's on a downtrend. Again, here's an exhaustion gap on Google. Notice we're in a
downtrend.
Gaps down, fails to make lower lows, starts to now pull back up.